everyone, welcome to Market Intel, the show that brings you what's happening in the front row with those working with SME businesses. This is another special episode due to COVID-19. So once again, we've got Tony Alexander back. How are you, Tony?
Good, thanks, Dave. Yeah, thanks for having us again.
And special thanks to Ian from Kendon's for once again coming to the party and making this show possible for us. So how are you going, Ian?
Yeah, good. Thanks for inviting me. Yeah,
interesting times we live in, isn't it? So what I thought, why we decided to do this so quickly and release a special episode is obviously, unless you've been living under a rock, Auckland is in level 3 lockdown essentially at the moment due to a second wave of community transmission. So what we thought would be ideal is to get a little bit of perspective from yourself, Tony, on what does this mean for New Zealand? Like, is this going to be another repeat of what we saw at level 4 back in March or whenever it was?
Yeah, okay, and I guess that's the main question people are asking at the moment, and maybe a lot of people sort of weren't listening to the Prime Minister, the Director General of Health, etc., when they said, look, we should fully expect at some stage there will be another outbreak in New Zealand, and this is what we've seen overseas in your Vietnam and China, etc. And yeah, so what I'm doing in my writings at the moment is definitely, painting this thing as a negative, because no way is this going to be positive for the New Zealand economy. But there are reasons to just take a bit of, a step back and not expect it's going to be anywhere near as bad. So the first thing, and I've tried to group some of these things together here, is that we've moved early. So we went into a hard lockdown within about 20 hours with only 4 cases confirmed at that stage. Whereas you look at some place like Victoria, lots of cases there 3 weeks before they went into a hard lockdown. So hit hard, hit fast. It's the approach which China has taken when they've had new outbreaks up north and in the west, etc. And it's proved relatively effective for them doing that. So I take, some sort of solace from that and the fact that we Kiwis are relatively compliant, and we will generally do what the government is going to tell us, sometimes reluctantly, as opposed to the independent, my individual right triumphs everything else, American sort of approach. But let me just run through some of the reasons for just not getting overly negative, first of all, about this after those first few points there. And one of them is that we already know how to work from home. So the systems are in place this time to immediately, where possible, we go and we work from home. There's no, or there will be no new tightening of bank lending regulations. The banks had already allowed for the fact that this could happen, so we're not going to see a new tightening up in that regard. There's not going to be a new tightening up of borders. Already we don't get the inbound tourists, so there's no negative sort of coming through there. And so there's no new negative impact necessarily on the export education sector or difficulty getting your staff in from overseas. There's no new bad outlook for the world economy. There was previously. Now, the world economy, it's still going to be chugging along in the next few weeks, doing what we were thinking last week and the week before. Businesses have, for the past 3 to 4 months, they've trimmed out a lot of the dead wood. They've rebuilt their working capital levels and got them probably above normal in many cases, got their debt levels down and recapitalized for many listed stocks here and overseas as well. So that puts them possibly in a better situation than was the situation back, of course, in March, etc. The Kiwi dollar has gone down by a little bit, nothing too major, but it helps. And the fact that it hasn't fallen away is possibly one reason for having the most perspective on this. Overseas, there's no shortage of countries which would willingly swap what we've got here physically today with their situation with trying to suppress the outbreaks which they have, it seems, on a permanent basis until a vaccine comes along. We have the finance minister who about 3 weeks ago said he's setting aside $14 billion from the special $50 billion fund, specifically in case we do get a new outbreak. So I think we can expect that assuming we do get the lockdown extended, certainly maybe the rest of the country, an extension of the wage subsidy scheme. We already have, the Reserve Bank has said there will be an extension of the mortgage deferral scheme. They're just working out the details with the banks, and they're going to be announcing that in about a week's time or so. The outlook for interest rates is lower than it was before. So the Reserve Bank, they've already said they're going to print a bit more money over a longer period of time. And in their monetary policy statement, they emphasised a number of times they're investigating negative interest rates. Now, maybe not. Australia's worse. and the Reserve Bank of Australia has said they don't intend taking interest rates to negative levels. But it means, maybe for New Zealand, that low interest rate outlook is going to extend for longer than we were thinking. And just finally, when we went into this last time, it was completely new. We didn't know what happens during a lockdown, and we certainly didn't know what would happen afterwards. Well, now we do. And we know that during a lockdown, we basically, we stay at home, we cut back on our spending, we see our cash reserves rise. And when we are free, we engage in some degree of catch-up spending. And obviously the extent and duration will reflect the duration of the lockdown period. And the other thing that we've learned that we do is, well, with low interest rates and with some extra cash on hand, we dive into the housing market. This is the thing we have learned. We dive into the share market, we dive into asset markets generally here and overseas. So if somebody's looking at this at the moment and you're only looking at it from the housing market perspective, already I've spoken with some real estate agents that their online auctions are going just fine. At the moment, the system can just get up and running straight away. And I would say there's no shortage of investors and first home buyers out there who have actually got pretty frustrated in the past maybe 6 weeks when they've found the listings they were hoping for have not appeared. The bargains they were hoping for have not appeared. Now, many of those people that they had actually started backing away from the market, I'd say maybe they're now thinking, right, there could be another opportunity fairly soon to get back in. So for me, it reinforces my expectation that maybe there is still capacity for average house prices in New Zealand to fall 5%, but it still leaves me expecting that generally the market recovering over 2021 with differences around the country. So that's just some of the stuff I'll be writing up here and there in the next few days.
So how are we sort of tracking along compared to what the original forecasts were talking about back in lockdown? Was doom and gloom, and a couple of days ago they were talking how unemployment had actually dropped, hadn't it? But then there was some speculation that we're in a bit of a a W economy. You economists love to your V's and your W's and your whatever else you've got.
Yeah. People are always looking for forecasts, but people have to remember that the solid basis for us as economists isn't actually forecasting. It's more modeling of, if a thing happens, what may be the impact on the economy. Now, that doesn't mean we actually know what the impact was going to be before this thing comes along, but we can say that, if inflation picks up, interest rates will be higher than they would otherwise be. Doesn't mean we can actually forecast what the level would be. It'll just be higher than would otherwise be the case. Now, the evidence is that with all the catch-up spending over the past 3 months and low interest rates sort of play there, people substituting money they were going to spend on holidays to spending in New Zealand, the economy has performed better than anticipated. Even the labour market has performed better than anticipated, but obviously maybe some of the jobs have been temporarily preserved by the wage subsidy scheme. And I myself, I've got a number of surveys up and running on a monthly basis now. One of them, I ask people about their spending plans. Are you going to spend more or less over the next 3 to 6 months? And 3 months ago, I had about a net 7% of 4,000 respondents say, I'm going to spend more. It was pretty much the same 2 months ago. The most recent one, which actually was just a couple of weeks ago, I had a net 19, a higher, 19% saying they're looking at spending more. I've even got more people saying they're going to spend on home renovations. I've got another survey there of real estate agents all around New Zealand, and I asked them things like, are you seeing FOMO in operation on the part of buyers, fear of missing out? And that has increased over the past 3 months. And I asked them, do you think prices are rising? That's increased. Are you seeing first home buyers, investors? All these measures basically increasing. And one of the things that's interested me is that we've even got relatively good demand out there for empty sections for development land. People are looking at, getting a house built, whether they're in New Zealand or the Kiwis coming back. So we go into this new lockdown with the economy having some reasonable upward momentum, but some of the stuff we've seen is completely unsustainable. It was bounced back. And one of the things I wrote for my weekly publication earlier today was that I think we've seen peak catch up on the retail spending. We've sort of used up the spare cash and diverted a lot of the $10 billion we were going to spend in the next year overseas. And I've been expecting things just to pull back a little bit for the next maybe a couple of months. But thankfully, we do have the economy in reasonable shape, but you're still looking at the unemployment rate going to 8, maybe 8.5% or so.
Gotcha. So it's kind of like you say, it has been a little bit of a boost because of the whole being locked up and then let out, and then obviously cushioned with the wage subsidy. But What's your thoughts on what the Reserve Bank's been doing with the sort of quantitative easing, which is essentially printing money to try and stimulate the economy a bit? Now, I work in my day job is actually working in finance, and interested in you talk about developers and property, and I completely agree. Like the last 3 or 4 months, all we've sort of been looking at is development-based funding because we do the capital that you can't usually get from the banks. You do it with the private investors and the private funds, and it's gone gangbusters. So what's your thought? Is that the right thing for the Reserve Bank to be doing right now? Is printing more money?
Yeah, I mean, with the Reserve Bank through printing money, their aim, they should actually spell this out a bit more intensively there, is simply to keep interest rates down. We know that when your government's running a big deficit, the debt management officers selling, billions and billions of bonds, it places upward pressure on the medium to long-term interest rates. The Reserve Bank can keep floating interest rates down with the official cash rate kept at 0.25%, but they can't control the longer-term interest rates. However, by themselves going into the market and buying those medium to long-term government bonds and local authority securities, etc., which is the printing of the money, they can suppress the long-term interest rates. And one of the things they talked about in their monetary policy statement just yesterday is potentially doing what the Reserve Bank of Australia has already been doing, basically lending to the banks fixed interest rate 0.25% for 3 years as a way of keeping down those certainly median lending interest rates relevant for the business, the farming sector. And they're going to be having a look at that. They also talked a bit about still investigating negative interest rates. I'm still a bit dubious on whether they'll go down that route. The Reserve Bank of Australia have said that they don't plan going that way. But the fact they mention it has already placed some mild downward pressure on the interest rate. So I think what they're doing there with the printing of the money to target those lower interest rates for longer is a good thing. And finally, it was back in May, in the middle of the month, in their previous monetary policy statement, they did admit that they see a risk of the printing money causing asset prices to be higher than would otherwise be the case. Housing, commercial property, I guess share prices, because that's what we learned overseas following the global financial crisis with printing by the Federal Reserve, etc. They do still have some bullets in their gun, as it were, to be assisting the economy, and I expect they'll probably do some extra moves, just as the Finance Minister probably will dip into the $14 billion there. Makes perfect sense. It's what it's there for.
Gotcha.
Can I just jump in there? So how do we make sure in New Zealand with quantitative easing it doesn't just lead to inflated property prices and or people putting money into the stock exchange, that it's not stimulating economic growth? How do we stop? How do we make that happen? Or is that just something you can't do?
Yeah, pretty hard for your central bank, I think, to really be controlling the asset prices. They will simply be keeping a very strong eye on bank lending practices. And of course, there is no sign from the banks that they are going, hey, everything's sweet. You want some money to invest in the share market? Let's pretend it's 95 or 87. Is that, that's simply not going to happen. The banks have tightened up their lending criteria. They have started loosening a little bit. They've been cutting their test interest rates for debt servicing most recently, but it's still very difficult, as you just said there, Dave, earlier on, to get money for development, for property development. It's people are going to the non-bank sector, or especially backed by private wealth there, and the development interest is still there. We've still got a growing population. And let me just get in here one of the interesting things that 3-4 months ago, when we're looking at the borders being closed, everyone's talking about, oh my God, migration is going to collapse. What nobody realized was happening at the time was that even before we'd ever heard of this virus, there was a decrease in the number of Kiwis going overseas. More of us were coming back to New Zealand. And it means that in the year to June, we're up to now, the number's just gone off my head. I think we're up to a net gain of Kiwis in the past year of about 18,000. We've never seen anything like that previously. But we thought that over the 2-year period, January 2019 to December 2020, the total net migration gain for New Zealand would add up to about 80,000 people, 40,000 each year. Well, in the 18 months from January 2019 to June this year, we've already got a net migration gain of 103,000 people. We've already got the population boost we expected in the year to about the June of 2021. So that's been a strong insulating factor. That's not going to change and get worse as a result of this new lockdown.
Nice. And talking a little bit, going back to the start when we were talking about the global economies, like New Zealand's obviously performed better than what we hoped, which is good. However, you know, if we looked at the news as of today, being the 13th of August, the UK's announced it's gone into its deepest recession since records began in 1955. Now, you could obviously that's most likely COVID related, but what knock-on effect does that have on a global economy? Being that UK is obviously one of the largest economies, and what kind of effect could that have on us here in New Zealand?
Yeah, not quite one of the largest economies there, 65 million or so population versus your few hundred million in Europe, etc., and China or whatever. It's, I guess, let's run through some numbers. So the United States economy shrank about 10% during the June quarter. The European Union did about 12%. With Spain and Italy, I think around 15, 18%. The UK with the sort of harsh on again and then sort of lockdown there about 20%. But this is June quarter stuff. And the economies will already be recording, growth for the September quarter that we are in. And if we look at New Zealand, then the Reserve Bank estimated just the other day, and we'll get Treasury's estimate in a few days' time, that our economy shrank about 14% during the June quarter and will bounce back up by about 12.5% or so they had for the September quarter. Now, the bounce back is now going to be less than would otherwise be the case because the lockdown, whatever duration, is going to reduce that number. But the world economy, I guess we already know about the negative June quarter for just about everywhere around the planet, I guess, apart from China, where they've already started recovering. It's more, I don't think there's a new knock-on impact on the world economy as a result of what has already happened out there. I guess if there was anticipation of such, we wouldn't see the strength we see in some of the commodity prices, which is good for New Zealand. It's one of the insulating factors for our economy, the gold prices, the share markets, etc. Really, the biggest threat out there is not release of economic data showing what happened a wee while ago. It's that the vaccines don't work. Now, there we're in a whole different planetary situation. I guess I'm still, like pretty much most other people, assuming that eventually the vaccines work. We'll see what happens in Russia over the next few months. I'm not sure I'd be first in the queue there to be accepting their injection. But I'm still running on the assumption that our borders are closed until the end of 2022. But eventually there's a vaccine and we can, I don't know, we'll start to get back to some normal maybe in 2022, 23.
Yeah, gotcha. So basically what you're saying is keep calm and carry on, as they said.
Yeah, the old British saying, keep calm, carry on. We've gone into this lockdown number 2 in better shape there, or more ready. I think what we're feeling at the moment is obviously a lot of disappointment. We can no longer be up ourselves as we look at the rest of the world. We have a new outbreak, and it'll be interesting to see exactly where it is has come from. And I would have to say that so far, I think we're handling it better, obviously faster than other countries which have had outbreaks. And we can only just hope that if they extend the lockdown, and I'm assuming they will, it'll be a relatively short duration. We'll just have to see what comes along there. But for me, the fundamentals for our economy of the farming sector is in good shape and they're getting good prices overseas. The $10 billion we were going to spend overseas, we're spending domestically now. The low interest rates. I'm still of the view of our economy improving, just as the Reserve Bank is, for each of the quarters, sort of from the one we're in at the moment. But I think we're just in a little bit of a state of stasis for a few days, few weeks, and then we go back to the upward path again a bit further down the track.
Nice. And Ian, any last questions or any comments for Tony?
Well, probably a tricky one politically. What's your view on foreign investment to stimulate growth? And assuming that we would want to attract more of that, what would the criteria be for foreign investment in the 2022 and beyond?
Yeah, people often ask this question. Oh, a bad thing is happening in New Zealand. The economy looks weak. What can help us? Oh, I know, other people's money. If we let's let in the rich foreigners and we'll charge them, $1 million a pop and they can come here. Now, I would do that at the moment and whack them in an internment camp out there to the Wairarapa or something like that. maybe they'd pay from all around the world. Okay, but in practice, I don't think we've ever actually done that in New Zealand, tried to stimulate our economy in the short, medium term with changes in the foreign investment policy. Most recently, of course, around the world, it's more of a tightening up to do with the geopolitical situation with China. It's sort of a near universal thing there. I certainly don't think it's something the government would be looking at. And we've always got to remember that if people overseas have this money, they've got it for a good reason. They're pretty canny with their investments. They do extremely good due diligent sort of investigation. And they're not just going to be throwing money down at sort of the arse end of the planet here, simply because we seem to be okay in terms of sort of on the COVID side, and to deliberately stimulate our economy. We tend to be not the first cab off the rank when someone's looking at investing their money around the planet. Having said that, the agricultural sector, I have no doubt there is money which would just love to get exposure to New Zealand's primary sector and the good reputation that we have overseas for the products we produce, which has been the case for a couple of centuries now. And thank goodness we are still a farming-based economy, because it is one of the factors going to be assisting us over the next few years.
Awesome. No, that was great, Tony. It's always good getting your perspective, and thanks for your time at very short notice. So great to have you back on, and yeah, hopefully we don't all get locked down again, and we can just sort of get through this little blip and just get on with our lives, eh?
Yeah, hopefully we'll see how it goes. So look, thanks very much for having us in there, Dave and Ian, and good luck to everybody out there.
Awesome.
Thanks, Tony.